We're going to be observing the S&P 500 E-mini futures chart starting at this 180-day level. Looks like we got a huge uptrend from this 3,500 area to a top of that 4,180. A 50% regression, ICT, between this 3,500 low and this 4,180 is, let's do the math. 3,500 plus 4,180 equals, divided by 2 equals 3,840. We have this 3,840 level as our 50% regression, and we had a base forming on it and then an expansion upwards. So if we look at this at a 90-day time frame, definitely see a bullish indication. Low right here, higher low, a consolidation at a higher low, then an expansion upwards that we saw this last week. And now we're going to start looking at liquidity points, which is where it's going to be easy for big banks to buy and or to sell at. Liquidity is how easy it is to buy or sell an asset. So we're looking for liquidity points where longs will become long on the breakout, shorts will be trapped, resulting in they're stopping out by them buying, which will become huge buying liquidity, which inevitably is easy to sell into. So when it is easy to buy something, or let's say when it's easy, when everybody's buying something, it's easy to sell. When everybody's selling something, it's easy to buy. In all markets. So we're going on a 30-day time frame. We just got out of this channel range from about this institutional 3,900 level. There, came back, accumulated. Right here we accumulated and drew out liquidity on a closer level below this, right here and right here, below that 39.16 area. They wanted to run everybody who was under this level because shorts are looking to go short on this breakout, adding that sell liquidity. Longs are trapped right here, selling out their positions. When everybody is selling, it is easy to buy. So institutions know that. They ran this stop right here, got in. It then needed to accumulate more, came up, couldn't get over these highs. Retail distribution down, back into that liquidity zone under 39.1650. Accumulated, reaccumulated here for this huge upside move. So it is January 21st. It's a Saturday. This is what we're going to be looking at on Monday, the 23rd. We're going to be just eyeing liquidity points as we see them. So we know that there's huge liquidity over this 40-30 area, upwards of that 40-30, 40-27, 40-30, where they distributed their shares. They continually distributed their shares over this top that they made on the 12th of January. Redistribution. When there is a lot of buyers trying to buy this breakout, trying to get above this area, which it failed to do so because it was capturing liquidity at these highs and further sold off. So at this high right here, newbie traders, new money, dumb money, street money is going to be looking to buy these breakouts above this high, trying to form new highs, which is why you don't buy on the breakout. Check it here. Price came up right here on this extension down, touched the 60, 62 area like it did right here, bounced up, grabbed this liquidity right here at these exact lows, bounced up, broke out. We know there's excess liquidity over here because there's going to be short sellers who will stop out over this, and there will be buyers who will be buying the breakout. There will be excess liquidity, and it will be easy to sell. So what we did, continued over, huge rejection, tried to go over it again, excess liquidity taken out of the market, sold into, boom, tried to hold up, tried to come top this top, excess liquidity, buying the breakouts, short sellers stopping out, excess liquidity, sold into, easy for a bank to sell over here, over this area, or over this area, and then trying to form back up into this area on a huge spike on this 30-minute one candle spike. Easy sell for banks. Tried to accumulate at these 39.97 lows. Came back up. Tried to break out over this 40.29 high. Broke over. Excess buying liquidity. Came back down, bounced again, redistribution, fade. So all big banks had distributed their shares. All right, we're back. So they redistributed, or they distributed everything over that 40-30 area as high as they could. The banks are going to be looking to sell high, buy low. Basic economics of a business. So whenever you see liquidity, like liquidity in any area on the chart, banks are going to magnetize towards that area. So they magnetize towards all these highs distributed. And I wait to see on these pullbacks, I wait to see like a rejection, like at least a couple bar rejection on the green side. So like we made this low right here at that 39.06, 39.07 area. Huge rejection, volume came in, and so now you know that there is liquidity all under this 39.07 area. So everything under this 39.07 area, all these longs right here are trapped. All the shorts are going to looking to go long, which means they're going to look to sell into this, which means there's going to be excess sell liquidity. There's going to be huge sellers, a lot of selling, which is going to make it easy to buy as traders give up their shares. And this 3900 area, institutional area, came, respected 3901.25, booted up, came back down. And now we have this 3916 acting as this support liquidity area. Everything under that will be excess liquidity to boost this price up. So what do we know after Friday's events? We know that this is in a 3-month bull run, bull cycle, excess liquidity over this 40-30 area. Let's see. Excess liquidity over here. Whoops. excess liquidity over that 4180, which they may also target. And we have excess liquidity accumulation under here as well. So if we go back to a year time frame, this is what's been going on for a year. We can clearly see that we've had, well, let's actually go from the highs. We've had lower high, lower high, lower high, lower low. Grab this liquidity under here. Grab this liquidity under here. Kind of making this base, just like we're doing here, making this base. Shoot upwards, and then this could be that shoot upwards, or we could be trying to retarget this excess liquidity over 4180. In my opinion, I don't know if we're going to get to 4180, but we sure did have huge accumulation at that 3900 area. So it's a tricky thing to say what we're going to do, but if we know where liquidity rests, we know where the banks and algorithms are going to target. We could hope for a targeting of over this 40-35 area for them to redistribute down, redistribute down, lower, dump all their shares from here, redistribute everything that they have through here. Or they could look to retarget under here and to here for more accumulation for a bigger move, potentially upwards, or a third scenario where this accumulation will be continued, potentially at that 39.98, 4,000 area. What I'm looking for is the exact opposite of this. A shoot up, a rejection, a shoot through that liquidity of rejection, another rejection, wait for price to try to get back to that, more distribution, and then continued sell off. So this is what it's going to look like. Let's see. Let me draw it on the chart for you. Make it short and sweet. So I want to look for something like this. Come up. Rejection. Try to gain this excess liquidity over that high. Even further. And then I want to see it try to come up and try to grab this liquidity at the high again, but not get higher. Come down and then fade down to the lows. So that's what I'm looking for this coming week. If we do have redistribution, I don't want to be looking for reaccumulation. I want to be looking for the exact opposite of this, which you see how this made a low, then it made a lower low, came back up, and then extended. I want to be looking for the same thing. High, higher high, accumulation, distribution, and a lower low. So that is the game plan for this next week. If you got something out of the video, comment, subscribe, like. See you in the next one. Peace.